In this episode, we cover HP, we cover Splunk, we cover Salesforce, and we talk about Dell Technologies, all here on Making Markets.
This is the Making Markets Podcast, brought to you by Futurum Research. We bring you top executives from the world's most exciting technology companies, bridging the gap between strategy, markets, innovation, and the companies featured on the show. The Making Markets Podcast is for information and entertainment purposes only. Please do not take anything reflected in this show as investment advice. Now, your host, Principal Analyst and Founding Partner of Futurum Research, Daniel Newman.
Hey everybody, welcome to Making Markets, episode 3. And this is a monologue, the first in the series, where you're going to get to talk to, well, you don't get to talk to anybody, but you're going to hear from me. And I'm going to talk to you about a bunch of earnings that took place this week, big week, end of August, so much going on. Heard from the Fed today. Seems the market reacted very positively on this Friday, August 27th, if you are concerned about the date. And this week we had a bunch of tech earnings, and you heard from Matt Murphy at Marvell. And if you haven't listened to that episode, I highly recommend that you do. Today, I want to talk about a couple of others this week that I was dialed into, and here at Futurum Research, we've been paying attention to Splunk, Dell Technologies, HP, and Salesforce. And if you're not familiar with the Making Market Podcast, or you didn't listen to our introduction, just quickly, reminder for everybody. The show here, it's all about kind of getting to what wasn't obvious from the earnings calls or from the investor day or from some big merger, acquisition, or other piece of news, trying to get between the lines. So let's start off and talk a little bit about the quarter for Splunk. The company had its second quarter fiscal year 2022. And I'm going to keep this pretty brief because I'm expecting in about a week and a half that we're going to actually have Doug Merritt, the CEO of Splunk, join the show. We've had Doug on a few different times across a few different shows here at Futurum. Really good guy. Definitely knows how to break it down. But there's a story going on. And since Splunk's earnings happened this week, I don't want to neglect to talk about an important company here in the observability and data to everything, as they like to call it, space. So how the company do? Well, did well. And the real between the line story that everybody needs to be taking away about Splunk has less to do with the revenue, which was good, the growth, which was solid, the overall customers above 1 million, which, by the way, usurped 230 this quarter, up 100% year over year. And the overall conditions for the company being in pretty good shape following some serious injection of cash from Silver Lake. The story is that this is a company in transition. We hear a lot about things like recurring revenue, and we hear about things like cloud transformation. Well, Splunk is like the personification of what is going on here. This is a company that completely revolutionized its business model. It went from perpetual licensing and data ingest cost to a cloud subscription revenue, and basically told the market it was going to flip its business model on its head. It was going to change how it went to market, and it's doing that. So, what stood out to me? Well, the cloud ARR growth, 72% up to $976 million. The total annual recurring revenue is up 37% to $2.63 billion. And the cloud revenue itself hitting $217 million, 73% growth. And like I said, the other thing is big customers is the story that needs to be told when it comes to Splunk. They now have over 582 customers spending over $1 million total in recurring revenue with the company. That's up 47%. And then I mentioned that 234 customers spending over $1 million, up 100%. So lots of changes at this company, leadership changes under Doug Merritt. He talked about this on the earnings call. But the story to watch, the thing that's really piqued my interest, is the fact that this company is in transition and it's succeeding with this transition. So it had to take a step back, maybe half a step back, reset the business, reset the customers, but definitely leading in the spaces where it's competing in security ops, IT ops, observability, and it's also doing a great job in its cloud transformation. So there's Splunk. There you have it. Let's talk a little bit about Dell Technologies. Dell had a whopper of a good quarter. Um, you know, old PC makers sometimes aren't the most exciting companies to talk about, but if you told me that about Dell Tech, I would have to disagree. Um, had conversations over the years with both Michael Dell, Jeff Clark. These leaders are all about innovation. They're all about innovating the business model, making big changes, and this is working. 26.1 billion in the quarter, 15% up. So big growth in OPEX. Sorry, in op income, and of course, it's good. It's running at $100 billion a year in sales. Very strong. A couple things that I think need to be paid close attention to are that one, there's a split in the business between its in infrastructure ISG group and its client compute group, and this is they call it ISG and CSG infrastructure and client. The infrastructure business is been a little slower to grow. This is the on-prem big iron that's being bought for data center deployments, but servers are growing, networking is growing, and storage fell back. But this is a company that's leading in these categories, number one in all these categories, and is doing pretty well. The comeback to these spaces has been slow following the pandemic, but Dell is in good shape in here. And the area to really watch that isn't being talked about that much is Dell Technologies APEX. And Apex is the as a service business that's being deployed. It's going to try to basically be public consumption style cloud for private cloud. And then, of course, all the technologies to help connect cloud. Another big story between the lines that's going on that people need to watch is the vmWare spinoff. In October, Dell will fully complete the spinoff of VMware, which it holds over 80% of stock. And this is going to be a pretty massive change. VMware has been a catalyst of the company's, um, pivot to participating in public cloud. It's going to have alternative means to doing that across its portfolio, and it intends to continue its deep relationship with VMware. But this also opens up Dell to other partnerships, which could scale its public cloud or hybrid cloud ambitions. Big changes in leadership at VMware. Pat Gelsinger fled earlier this year to head over to Intel. Great opportunity. The interim CEO took over, and one of the key leaders, Sanjay Poonen, who was COO and possibly one of the incumbents to become CEO, has now left. So, kind of an interesting set of circumstances. Turnover at the top of the company for VMware, and this, of course, may have had something to do with it only growing 8%. But then again, the company's only been growing about 10% on each and every quarter. But big growth in its AWS business with VMware. So VMware is an interesting one to watch, but it's going to be watched separately from Dell in the coming year. And the last spot that was probably really worth looking at with Dell was the client compute group. I mean, what a tremendously strong quarter for the client group. The company saw above 20% growth. It saw $14.3 billion in revenue. I believe that was 24% year over year. And in the commercial client space, it actually saw, I think, growth in its market share for the 30th time in 34 quarters. So very strong in that business, saw very large growth, which actually contrasts the next company I'm going to talk about, at least in terms of the client business. And so the next up here is going to be HP. And I'm talking about HPQ as the ticker, or HP Inc., or the PC HP. Not everybody knows, but Hewlett Packard Enterprise and Hewlett Packard Inc., not the same company. If you're in the space paying attention to tech, I hope you would know this by now, but quick reminder for anybody that didn't. They also reported. So you had Dell Tech and HP both reporting in the same day. For HP, it was their third quarter fiscal year 21. So, and the company overall saw kind of a mixed set of results. 7% overall growth. Growing is good, especially when you sell a lot of hardware. But in the pandemic fueled world that we're in, we've gotten used to really large double digit growth in the systems, PC, computer space. And that was not where the growth came from. So 7% overall growth, but PC revenue was actually flat. It was 3% growth on the consumer side, down a percent on the commercial side. What is this attributable to? Well, I had the chance to talk to CEO Enrique Lores, and it's the supply chain. So we keep hearing about supply chain. We hear about how the supply chain is setting the market back. And for HP, the company's sitting on a quarter of backlog that it can't fulfill. Now, to give you a little context and perspective, typically in a normal conditions, a company would have maybe 2 week backlog on PC shipments. So, in short, the reason that HP was unable to have what would be maybe more of a double digit plus growth number in the PC space was it couldn't fulfill the demand. The demand is high. So, looking deeper into those numbers and into the market, what I believe needs to happen is the company's going to have to really assess its supply chain, which Laura seemed to be confident in. But when you see Dell growing at 30%, Lenovo had a strong quarter as well in PC, you have to wonder what's the difference between companies and are there optimizations that can be done that would enable them to ship more units to hit those growth numbers that the company would expect to hit. And a really positive, the print business, which is still a thing, it's actually a really big growing thing. And for HP, it was a 24% growth number this quarter and huge on commercial, 46% up. Print will always be a thing. And HP certainly has leadership in that space, make a lot of income on that particular part of the business. And now their print as a service or their ink as a service business just used 10 million subscribers. So that's a really big number and warrants attention. Love the annual recurring revenue there. That's something that HP and its investors can feel positive about is that it has a growing recurring revenue business on the print side. And then the last thing that was really worth noting was the company saw income growth of 71%. So because of the print being the big growth, print about doubles personal systems in terms of margin on products, really important growth number. And it really added to the bottom line. And that bottom line, by the way, is being reinvested by the company. Laura's pointed out to us that the company still believes it's undervalued. So that's meant beyond just the dividend, the company has been doing quite a bit of buybacks. And so I believe there was about 1.7 billion returned to shareholders through repurchasing and dividends in the quarter. Always like that. If you're an investor, shows a lot of confidence in the company and tends to keep the price high. All right, so let's take this home and talk about Salesforce. So we've done infrastructure, we've done PCs, we've talked a little bit about IT ops and SecOps and observability. Let's talk about SaaS. Salesforce had another banger of a quarter, beating on earnings by over 50 cents a share and coming in just above what was expected in terms of revenue. This was 23% growth, really encouraging numbers. So the story between the story, I published a piece on MarketWatch. I'll throw it in the show notes, all about the Slackwisition. Yep, the Slackwisition. I want that to catch on, so I'm going to say it one more time, the Slackwisition. $27 billion spent on the acquisition of Slack, which was closed in this most recent quarter. People wondered, was this a good deal? Company had about $1 billion in revenue running into the time the deal closed. I think it was just in the beginning of the year that about 2 quarters ago that the company got onto a $1 billion run rate. So spending 27 times the run rate was a lot. But why did they do it is the real question. So if you kind of look across the revenue, Salesforce shares some data every quarter about kind of the disaggregation. So essentially their revenue falls into 4 big stacks. It's sales, it's service, it's platform, and it's their marketing cloud. Well, most people that know Salesforce and have followed the company for a while, follow the company and know them for being a sales CRM software, right? Their ticker, CRM. But this stuff is all converging: sales, service, marketing. So they've got the sales cloud, they've got the service cloud, they've got the marketing cloud, and they've made major investments. Some companies like MuleSoft may come to mind, Tableau may come to mind. that preceded the acquisition of Slack. And sales is only growing, and I say only because it's software, but it's growing 15%. Meanwhile, service is 23, marketing is 28, and perhaps the one that everybody needs to have their eyes on is the platform, which is up 24% year over year. And the other thing, though, to note about platform is it's now also the business's largest stream of revenue. Now, it's been that for several quarters, but the gap continues to expand. Platform is where the investment is being made. And Salesforce is doing this because it knows to compete with Microsoft, to compete with a fully vertically integrated stack of infrastructure, platform that can be extensible out to your CRM, your ERP, reaching all your data. And then, of course, having the application layer, there was going to need to be some strategic acquisitions made. This is going to be done through the acquisition of Slack. So Microsoft is doing it with Teams. Teams is the center of the work environment in a hybrid remote work world. Well, Slack has the same power, same potential to streamline work, connect to your CRM, connect to your ERP, enable simple visualizations, updates into systems of record, and do it all through the Teams / in Salesforce's case, Slack experience. This is why it was bought. This is what the company is going for. It's all about stickiness and net revenue expansion. They want to sell more diversified products and services. They need to be able to be the center of work for the workers that are going to be forever hybrid and forever remote. And this is only going to be further fueled by the pandemic. Mark Benioff spoke to this. He was very clear about this in his most recent earnings. We will not return to work as we know it. And Salesforce is making the moves to try to compete there. Not to say there aren't others. Of course, Zoom, very competitive. WebEx, very competitive when it comes to meeting. And there's lots of ERP and CRM, very respectable products. Companies like Oracle, companies like SAP, Adobe, all have very valuable solutions. But that full stack approach is going to be centered around that collaboration platform that is going to work meaningfully to replace our inboxes and become the first place we go when we start our day and the last place we go when we leave. In the right position at the right time. Partnerships with AWS going to be really, really critical. And, because the company doesn't have an infrastructure as a service play. But overall, a great quarter for Salesforce, but that's the story to watch. The story to watch is how Slack gets integrated and how they're able to put that integration to use to compete with Microsoft. So there you have it. We've covered it all. We covered Splunk, we covered Dell, we covered HP, we talked about Salesforce, and it's time to say goodbye. I'll see you on the next one.
Thank you for tuning in to Making Markets. Enjoy what you heard? Please subscribe to get every episode on your favorite podcast platform. You can also watch us on the web at futurumresearch.com/makingmarkets. Until next time, this is Making Markets, your essential show for market news, analysis, and commentary on today's most innovative tech companies.